Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. In this video, we will try to understand where we have the highest probabilities for a potential move on this pair. And the way in which we will be doing that is first, analyzing the pair from a technical perspective. Then we will go and see what we have when it comes to the commitment of traders, which is what hedge funds and the non-commercials, so the biggest speculators in the market, are doing. So without wasting any more time, let's go straight to the charts. In today's video, I want to speak about EURGBP because at the moment we do have quite interesting price action and structure. Starting here on the monthly time frame, what we can see is that at the moment we are testing very strong monthly demand and support. In fact, from here, all this move to the upside was created. Again, here, the market tested its zone and rejected it to the upside. At the moment, we're testing this exact same level of monthly demand and support, from which we could expect more potential bullish continuation. So from a monthly perspective, everything is extremely bullish. We drop down on the weekly time frame, and here on the weekly, we can see how we have just created a nice impulse to the upside, followed by this correction. Now, in general, after an impulse and correction, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse. Now, sometimes I get questions, how do I measure how do I correctly place my Fibonacci from the low to the high? Well, the easy answer is just look at the last time that the market went to the opposite side. In this case, the last time that we went to the opposite side was from this high to this low, meaning that your Fibonacci needs to be placed from this low to this high here. And what we can see is that the market, in fact, has retraced exactly to the 0.786, which is the last Fibonacci level to which you expect the market to provide a correction to before then printing more bullish continuation. So here on the weekly as well, everything seems very bullish. Also important to point out is that if in 1 day and 13 hours, this candle here will close with this shape, we could expect the next candle at least to try to fill in the wick. That is usually what the market tries to do in a situation like this, meaning that we could expect bullish price action if we get a weekly close like this. Dropping down on the daily time frame, what do we have? Now, here on the daily, price action is very, very interesting. First of all, we had a lot of patterns which all completed in the usual way that these patterns complete. In fact, first we had the creation of this M pattern. I explained all the reasons for which we could expect a rejection to the upside. The market has provided that completion. In creating this move to the upside, the market also printed this W formation, and from here I made another breakdown explaining all the reasons for which we could expect the completion of the W at the neckline. And again, that is exactly what the market has given us. After that, we had the completion at this level, and I made another breakdown explaining all the reasons for which we could expect a rejection to the upside. Once again, that is exactly what the market gave us. Then we had the creation of this W formation from which we expected first the completion at the neckline and then the continuation higher. Once again, that is exactly what the market did. And then we also had the creation of this overextended W formation. Once again, after the creation of an overextended W, what you expect? As I said many times, after the creation of an overextended W, you still expect a completion of the pattern with a move to the downside, which is in fact exactly what the market has just provided. And by the way, I will link all this previous analysis in the description so you can go and check them out for more free education. Now, at the moment, as we have completed this W formation, this means that we are currently also testing previous daily resistance, which was resistance here and again resistance here, which now that the market has broken to the upside is turned here support and demand. And as we are testing previous resistance turn support, a rejection to the upside seems definitely a possibility. We must also notice that also here we have an impulse and correction. So once again, if we want to measure the impulse, we have to notice that the previous low is here and the high is here. So taking our Fibonacci from the low to the high, we can see how the market just stopped exactly at the 0.618 golden ratio of the Fibonacci taken on this daily impulse, which is a very strong demand and support area, from which a rejection higher definitely seems a possibility. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data for the euro. On the euro, we went from having a negative net positioning of minus 6.3k net positions with 214k shorts compared to only 208k longs, all the way up to having 50.5k net positions with 230k longs compared to only 179k shorts. So the euro is getting quite strong. If we go and see what we have on the pound currently sitting with minus 70k net positions with 105.4k shorts compared to only 34k longs, making the pound quite weak, meaning that if at this level we will have a deceleration, a potential rejection higher is definitely a possibility. Now, how we could be approaching such a move? Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection to the upside for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say market environment shift and valid entries, that is all part of the mentorship program, which you can now access completely for free. In fact, the link is in the description, and I really suggest that you go and check it out because you can learn all the rules of the strategies and you will find a lot of valuable content inside of it. Now, if you enjoyed this video, also make sure you smash that like button and comment below. It really does support the creation of more free education analysis for all of you because obviously it helps with the YouTube algorithm, and I will see you in my next video.